Hey everybody, Jerry here. I just wanted to go over my trading plan and how I execute all of my trades. So everyone gets very confused with trades. Oh, what should I be sized at, or what should I be doing, or should I size up? Should I size down? And it's a very honest question. It's a very challenging question in the beginning. However, with trading, we all know there's no room for emotions. So if you take every trade based on a predetermined plan of where your entry's at, where your stop loss is going to be, what the target is going to be, what you're going to execute with, which every trade needs to be executed with discipline. It needs to be an A to an A plus setup. It doesn't need to be a guess. It doesn't need to be with any emotions whatsoever. This mindset comes 100% from my time in the Marines, where decisions under pressure has to be clear, has to be structured, and has to be controlled. If you can bring that into your trading, if you can trade with 100% clear instructions, you're controlled every time. If you feel yourself being nervous in a trade, you're 100% sized too aggressively. You need to size down. If you are not confident in the trade that you're taking, you have not back tested your strategy enough to understand, yes, you should be in this trade, or no, you should not be in this trade. If you are not back testing your strategy, you are not ready to be a professional trader yet. You are literally just going to lose your money in the market. You have to back test. You have to be very, very determined. So the only way to do this is have a predetermined plan. I'm going to show you in this video exactly how I do all of this. I'm going to show you a trade that I took this morning, where my entry is at, where I'm expecting it to go, of where I'm taking my profits, regardless if it's at my take profits or not. So in my opinion, discipline matters more than being right. Consistency with discipline will make you a very profitable trader in a very short amount of time if you have those things. So if you're interested in learning how all this works, please click the link below. Please like, please subscribe. So I'm going to show you now on this chart that I have pulled up. This is today's chart. Today is the 24th of March. All of my levels, my previous day lows, my aftermarket lows, all of that stuff is all set from yesterday's, the 23rd, and the pre-market session. So first things first, you want to establish your range that you're trading. So we're going to establish resistance. I have resistance here through the pre-market time. There's also a nice level down here, but this level wouldn't have mattered anyways. You would not have got your trade. So I had my level marked at 652.05. It's the bottom of the swing point in the pre-market here before it collapses below it and distributes down. Then I had my resistance. You can also see where it becomes resistance here at the 910 candle and how it's support through this region here, and it collapses below it. So then I have my overarching level up here at the top of this. And then there's another level that I had up here, which is not on my chart, but I'm going to mark it now just for explanation purposes so everyone can see what we're talking about. So now there's one level, there's two levels, right? That's my take profit 1. This is my anticipated take profit 2. If my contracts are already at 12 to 15%, then we'll go risk-free sooner, or we'll take more profits off the table sooner. So if you're trading 10% of your account with a 10% stop loss, you can only lose 1% during a trade. However, current market conditions, the way we've been trading, we've had to use a 12% to a 15% stop. However, so that being said, if you're trading 10% of your account, you can only lose 1.5%. If you're trading 20% of your account with a 15% stop, you can only lose 2.5% of your account. And 30%, which is very aggressive, I would not recommend doing that unless you're consistently profitable and you know what you're doing and you have lots of conviction on your own to take your own trades. So that being said, this trade here, 10 a.m. candle, is a news candle. It closes very well, closes above the level of 652.05 I had. I enter into my calls trade here. It comes down, it retraces. I had a wider stop set here trying to protect my support level, right? If it comes down and it taps me out at support and then it continues up, I entered, or I just got burned on that trade. If it collapses below that and it continues down, my thesis was invalid and that trade was not meant to be. However, we're trading into this range here. We get this push down here. We come down below our pre-market. Trade goes up. closes above. I had a little level in here marked. It never gave it to us. Not a big deal. This would have been a beautiful trade here to get all of that movement. However, you'd have probably got taken out at break even, possibly not with the way this candle retraced. So we entered in here. My trade comes back. I had a very wide stop trying to protect this support level, right? So I had approximately a 15% stop in here, not a 10 or 11%. I had a 15-ish% stop. It came within about 4 cents, 5 cents of mine on my options trade. This candle closes up. It goes profitable. Right around this region here, I always look for 8 to 12% on the first half of my position. So if you're in with 100 contracts, I'm selling 50 of them between 8 and 12%. That's a soft target. If it gets past that fast, quick, awesome. If it doesn't, that's where my minimum is. Now, that being said, if contracts are moving slowly, if there's erosion happening, now what I'm doing is I'm now 100% committing to the chart and not my take profits, right? So that instantaneously switches, but that is predetermined. I am always looking, number one in my trade, for 8 to 10%, 12% on my first take profit. If it is hitting my overarching levels and it goes through there really quick and it's only at 7%, guess what? I'm going risk-free at 7%. I'm not waiting for 8%. I'm not going to be greedy, right? Greed's an emotion. We take emotions out of our trading. We become profitable. Fair enough. If you're size too high, once again, guys, if you're nervous in a trade and you're feeling anxious and you don't like that, two things are happening. Either you're sized too aggressively, or B, most likely, you don't have enough conviction in the trade, or both. Either way, you should not be in that trade. Size it low in the beginning until you're profitable, until you're consistent. You don't blow your money and you don't blow accounts and have to refund them and add more of your own money in to fix all the stupid mistakes, right? Trading can make you a lot of money. It's not going to make you rich quick. It can make you a lot of money fast, but not quickly if you do dumb things. So you take the trade here. This trade here, I got out at about 9% on my first piece, and I was trying to tame my take profit there. Now, my second piece, I got off of really good positions at 16% on my second piece, and I was trying to trade into this upper wick area here, and then I was able to trail my positions into it. So I was trying to get my third take profit up into the PDL lows and the PDL wicks. It just never came up there. And my second, my trailers got stopped a little bit below where my second take profit was, which is completely fine. And that's how I manage that trade. So these trades set up Monday through Friday. They set up every morning. We trade from 10 to 11. So in that session, we'll find 2 to 3 trades. We trade Monday through Thursday from 2 to 3 p.m. every week that the market's open. 2 to 3 p.m. Eastern time, we'll probably find another 2, maybe 3 setups in that time frame. So if you're interested in learning how I trade, please click the link below, and I'll be more than happy to walk you through this and show that. Like, subscribe, comment, please. Anything that you guys are looking for on more content, more videos, show them. Send me the comments, and I'll be more than happy to make them for you and walk you guys through my thought process and my strategy. Thanks, guys.